Hello guys, welcome to another video. So in today's video I'm not gonna be going through the chat. There's a question that I got from one of you in the comment section from a guy called Ibrahim. So he's basically asking me about I think there's two parts in his question. So this is something that I want you to pay attention. So to answer this question, I don't really need a chart. I can just unpack it in, using the concept for you to understand the concept before we can try and apply it on a chart. So make sure that you're subscribed, because in the next video that I'm going to make, the market analysis video, I'll be, sort of just, even though it's something that I've always been using, but I'll just go through it slowly so that you can try and see how I apply it. But for now, I just want to teach you the concept, right? The theory part of it. Okay, so in your question, my guy, you were asking me about, you want me to make a video about time frame alignment and also how to use that together with support and resistance, right? Okay, so we're gonna start by talking about this, then we can come to this, then we will say okay, because now we understand what is alignment, time frame alignment, and also what is the support and resistance. Then we can go and say, let's try and use both of them to try and analyze the market. Or let me rather start with this one being number one and this one being number two. So let's start with support and resistance, right? So we can call it support, resistance, right? Or you can call it demand or supply. So that's basically the areas where the price tends to find, the floor or the ceiling. The price, if it's going to the downside, it tends to find ground there and then start to go up. That's your support. Or when it's going up and then all of a sudden it stops there and it goes down, that's your resistance, right? I know it's very simple if I put it like this, but you need to have a strict rules to say what constitutes a support and resistance, where do I find it on a chart and stuff like that, which is something that I want to show you now, so that when you're watching my videos, when I'm doing the market analysis and I'm just saying your support is here, your resistance is there, you know why I'm marking it, where I'm marking it, right? So let's talk with the support. Let's start with the support. So remember, support and resistance, they're just the opposite of each other. The demand, the supply, that's fine. So I'll put the support to this side, and then the resistance this side, and then we can call this the demand side and the supply side, right? So with the support, what you need to understand is that it is found at the bottom. So basically, you find it at the bottom, or look at it at more like your floor, basically on your chart. So that's the floor. That's where the price will tend to bounce from and then go back up. Whereas the resistance will be the opposite of that. You can look at it as the ceiling, right, which is at the top, right? So basically here, that's where the price will struggle to pass a certain point when it's in an uptrend, and then it starts to drop, right? I'll show you how to mark it later on. So for now, I just want us to agree on something, right? So if it's found at the bottom, you can just say it's found at because remember, when the market is moving, it moves like this, right? When it's going up, it moves like that, and then when it's going down, it moves like this, right? But before I get to this point, let's first say the support is more associated with the bulls or the buyers. So which means that at the support, we tend to find more bulls than the sellers. We tend to find more buyers than the sellers. That's the home for the bulls, which is why when the price gets to this floor, it tends to bounce from there and then it goes up. So that's where we find a lot of bulls. So which means if we know that the bulls are, the goal of the bulls or the buyers is to push the price up, then it means at an area of support or an area of demand, you should only be searching for buy trades, because we know that this is found at the bottom, and we know the concept of, they always say that you need to buy low and then sell high, right? So If we know that buying should happen as low as possible at the lowest price as possible, we know that the support is at the bottom, is the floor. That's where we will be looking for buy trades, because anyway we know that the support is associated with a lot of bulls and buyers. So we were trying to buy there as low as possible so that we can push the price up. So the next thing is to show you how to mark it, or where we find it. So the resistance quickly is just the opposite of that. We know that we said the support is found at the bottom. We said the resistance is found at the top. The support, we can call it the floor on your chart. The resistance will be the ceiling. And then the support, we find a lot of bulls, or the sellers, the buyers, which are the ones that the goal is just to push the price up, because remember, it's the floor. From there, you can't go beyond the floor. You can only move to the upside. So which means at that support, we can only be searching for buy trades. And then when you come to the resistance, you find a lot of bears or sellers, right? Because we're at the bottom, and we know that they're saying at the bottom, at the top, we know that we need to, as high as possible, we need to be selling. So because we find a lot of bears at this resistance, we'll be looking for sell trades only. Right? Now, this is something that you should always have in your mind. So location is very key when you're taking your trades. You'll see later on in the next video when we'll be talking about the market analysis. Location is very important. Why am I saying that? When you are a trader and you want to take a trade, you are analyzing, you want to decide whether you should be buying or selling. You can't just buy or sell anywhere. Location is very important. You need to be located somewhere. You need to be located around a certain structure. You can be located around a zone. You can be located around a trend line, but be located somewhere, so that when you're thinking of taking a buy trade, don't just be the only buyer at that point. So you need to try and make sure that you are buying around an area where there's going to be other buyers, which is why we said that the support is an area where you find a lot of bulls or a lot of buyers. So you need to try and make sure that you're located around those areas when you're trying to take trades. So location is very important. So now let's start with the support. I'm just going to bring in a chart now. Okay, before we do that, let's say the support, right? Where is it? Where do we find the support? We know it's at the floor, but where is the floor? When I'm looking at the chart, where is the floor? So there are two areas where the price can find support, or you can find an area of demand and push the price up. The most common one, or the most strongest one you can find on your chart in terms of the support or the demand, is the swing low, which basically means that on your chart you'll see something like this. So this is the swing low, this is the swing low, and then a swing high would look something like that. So in terms of the support, we find it at the swing low. So this is where we say this is our support. This is the most common area where you can find support. And yeah, it's the strongest one, which is the swing low. But what happens in a case where the price is going up in an uptrend? Because we know when you're in an uptrend, the price will be doing this, and then your areas of support will be there at the swing low, right? But what happens in a case where the price is going up, but it's not giving you this? It's not giving you swing lows. Does it mean that we won't have an area of support anywhere? No, the answer is no. Why am I saying that? I'm saying that because another area where you can find your support is at, we said the first one is swing low. The second one will be at the market pause, or we can call it a rally, a base, and a rally. I'm going to explain what that means, right? So this only, you can look at this one when the price is going up and it's not pulling back, it's not doing this, but instead it's just going up like this. It's the trend is very aggressive. So sometimes in that very same strong aggressive move to the upside, you will see the price moving up with the bullish candlesticks, and then maybe you'll have one red candlestick, the bearish one, and then the bulls continue again. So this is the pause that we are talking about. The market is going up, it's still on the same impulse move, but the move was not smooth. There was a pause in between. So that's the second area where you can find your demand, where you can find your support, which is a rally, a base, and a rally. The base is your zone, the actual support. Why we are saying it's a rally base rally? You're just looking at the move that came before the zone, then you have your zone, then the move that comes after the zone. So that's basically, because we said the pause, you see it in a strong move to the upside, where the price will just pause there before continuing. So we can call it a rally, then we stop, then we rally again. So that's why we're calling it a rally, a base, which is your zone, then another rally. So that's the second area where you can find your support. I think that's all in terms of the support that I can mention right now. So it's just a bullish structure where you find a lot of bulls, and it's found at the bottom. We are trying to buy, and we can also find it at a pause where during a strong impulse move to the upside. That's all in terms of the support. So I'm not gonna waste time in terms of the resistance, because it's just the opposite. So the resistance we already explained, you find it at the top where you find a lot of sellers. It's more like a ceiling, and you only look for sell trades there. And in terms of where you can locate it on your chart, it has to be at a swing high, because we said it's at the top. So the first area where you can find resistance will be a swing high, right? The second area will be when this move to the downside now doesn't want to give us this, but instead it just continues and give us a one bullish candlestick and then continues with the trend. So that's when we can say, okay, this is a market pause. So this is the pause where we can find a resistance, but this pause is different to the one that we saw when we were looking at the support, because here is no longer rally base rally. Here we are dropping. This is a drop, this is a drop. So a support, a resistance, we can find it at a pause, or you can just refer to that pause as a drop, base, and another drop. So the B in between will always be your zone, the actual zone. So the drop is just the move before the zone, which is this one, and then we have the actual zone, then we have another drop afterwards. So in terms of, because your question was about the support and resistance, so I tried by all means to explain to you what is the support and what is resistance, what kind of trades we should be looking to take at the support, at the resistance, and how do you spot them on your chart, which is just the two areas at the swing high, the swing low, and the pause during the strong move to the downside, or a pause during a strong move to the upside. So that's all in terms of the support and the resistance, or the demand and supply. So the second part of your question was around, so this part, I hope it makes sense. So this one, I hope this one makes sense. So the first part was about the time frame alignment. So to use this one, okay, I can also explain it without using a chart, right? So in terms of, with regards to the time frame alignment, right? I can say that when you are a trader, you can't rely on one time frame for you to make decisions as to whether you should be buying or selling, because sometimes one time frame can give you this picture, but then when you check other time frames, they say no, the picture is not like that, it's actually like this. So which is why it's very important that when you're a trader, you need to use at least two time frames, and they need to align with each other for you to have higher odds or higher chances of winning that trade. That's where the realignment, the alignment comes in of those time frames. Like I said, you need to use at least two time frames. That's the time frame, and they need to align for you to execute those trades. And where are you going to execute those trades? You're going to be executing, like I already explained, at your support, at your resistance. So now let's talk about this one. I'm going to use which time frames that we commonly use. We can do H4, H1. We can do H1, M15. It doesn't matter. So I'll go with H4 and H1 so that I can try and explain this alignment issue. So let's say because when you are doing your analysis, like I said, you need at least two time frames, and you always start with the highest time frame first before you can analyze the smaller time frame. You can't look at H1 before you have analyzed H4. That's why it's called the top-down analysis. I'm sure you have heard of those words before. We're doing your analysis from the top going to the downside, and even if you watch the videos that I have on my channel, we always analyze from the top and then we work our way to the downside, at least until the time frame where we are going to execute. So now here we have H4 and we have H1, right? So on your H4, you just need to make sure that even though some of the things that I'm going to mention here might not be related to the question that you asked me, but it's very important so that you understand the whole thing, right? So on your H4, you need to know where the market is going. I'm not gonna go through how do you check a trend and whatnot. I'll make another video some other time. So you are there on your H4, you check your trend, right? Let's say, for example, your H4 is going up, right? And then on the very same H4, after taking your trend, the price is going up. And then you're going to say, my H4, I need to mark my zones and a trend line, right? So if we're going up like this, you need to go there and say, this is, for example, this is my support and this is my bullish trend line. I'm only gonna be interested in the bullish trend line in a trend where the price is going up, because the price is bullish. The trend we said is going up. So the only trend line that makes more sense is the one that goes with the trend, so that each time the price comes down to either the trend line or the support, I can look for buy trades, because both these two structures, the bullish trend line and the support, they go hand in hand with the buyers because they are bullish structures. So they're there to guide you as to like where to look for your next trade. And the day the price plays outside the trend line and the trend line is no longer holding, or your support is no longer holding, that's when you can say, okay, maybe the trend is changing. But for as long as the trend keeps on going to the upside, you are going to always focus on your bullish trend line and focus on your support and keep on taking trades to the upside around those two structures, because we said location is very important. Just because you know that the trend is going up does not mean you can just go and start buying anywhere. You need to be located somewhere to increase your chances of winning, right? So that's what you are having there on your H1. I mean on your H4. Let's say currently the price is trying to give you a pullback like that towards your H4 trend line, right? Now let's move to a different time frame. The time frame on your H1 will most likely look like this. I want you to focus. So if you look at this part here, I used a different color for a reason. This part here, I used a different color for a reason. So during the very same part there, because remember, on an H4 chart, each candlestick represents 4 hours. On an H1 chart, each candlestick represents the price action for an entire hour. So which means one candlestick on the H4 will be the same as 4 candlesticks on your H1, if that makes sense, because they're just, it's 4 H1 candlesticks make one H4 candlestick. So during this very same movement that you're seeing here, if that movement is made up of one H4 candlestick, chances are that on your H1 you'll find 4 candlesticks there, and you might have stuff like this. So remember, in the very same move where you're having the bulls pushing up, the bears pushing down, bulls pushing up, that's H4 stuff. So if there's 5 candlesticks there, it means on the H1, the very same move is going to be made by 5 multiplied by 4, which is going to be 20 candlesticks. So you're going to have small candlesticks going there on your H1. So that's why you can have different trends between from, like, your H4 can be going up, your H1 can be going down, just like what I'm about to explain here. The very same thing that I said, you need to focus on that very same small move there. You'll find that the very small move, because you're going to the downside, the price was going up nicely, and then those we have a bullish trend line, we have your support, but then those 4 candlesticks that make this this move here, they came back and they're doing 1, 2, 3, 4. Then you'll find that your H1 is actually going to the downside. Then how do we then talk about alignment if my H4 is going up and then my H1 is going to the downside? Then you can say that if I want to trade, these things are not aligned. One time frame is pointing up, the other one is pointing down. But because the H4 is the bigger time frame on the 2 time frames that I decided to go with, that's the time frame that's giving you the main direction. So which means you need to try by all means to trade in that direction if you want to increase your chances. But now, how am I going to do it? Because I want to execute on the smaller time frame, which is H1, so that my stop losses can be smaller and stuff like that. But the H1 is not pointing up. but the H4 says I should be looking for buy trades. So that's when you have to say, okay, the two time frames that I'm using, they're not aligned. I need to wait for them to align so that I can take a buy trade. Where are they going to align? Chances are that they're going to align here. If I can just do this. Okay, I took that one out by mistake. So because we were having this and this one dropping, and then we have the trend line there, we have the support there. The realignment will most likely occur around the trend line because of what? That's the key structure of this H4 time frame, and the H4 is still bullish. So for as long as I said, for as long as you're bullish, look for buy trades around that bullish trend line or the bullish zone, which is the support. So the realignment will most likely happen there. But already your smaller time frame there is pointing to the downside. The smaller time frame is already here going to the downside. Then you just have to wait for the price to go down, because when it's going down on your H1, it's going to start doing this, going down until it touches the trend line. So when it touches the trend line, the buyers at this trend line, because remember I said you need to be located somewhere. When you're looking for a buy trade, you need to be located around a zone or a structure that has got other buyers around it, so that you are not the only one that's trying to push the price up. So once the price touches this trend line, the forces are going to start to push the price back up. That's when on your smaller time frame, you will start to see the price doing this, and then the trend on H1 will then change back to bullish. Then that's when you can say your H1 has aligned with your H4, then you can continue buying like that. That's the how the time frame alignment works. You need to just understand that you must always have at least two time frames, and then the bigger one, you just mark your key structures there, mark your trend line, mark your zones, decide on the trend. Then when you get to the smaller one, that's the one where you're going to be taking your trades, and you must try by all means to take the trades in the direction of the bigger time frame. If they are not aligned in terms of the trend, one going up, one going down, you have to wait for the smaller one to push the price towards the key structure, either the support or the trend line if it's a bullish trend of the bigger time frame, before you can take your buy trades, so that you can realign with that bigger time frame. That's how you use the support or the resistance or the trend line as well during the trend, what do you call it, the time frame alignment. That's how you use the structures. I hope this answers your question, because the question was around the support, the resistance. I explained what those are, how do you identify them, and also where do you find them on your chart. And then also I explained the time frame alignment by saying that you need two time frames. You need to start with the bigger one and then decide on what's happening there, and then move to the smaller one, try and take the trades on the smaller one in the direction of the main trend on your bigger time frame. That's the alignment. If they are not aligned, you wait until the smaller one aligns with the bigger one, then you can take your buy or your sell either from your support or your trend line or your resistance. All right, I hope this answers your question. So just make sure that you save this video, play it over and over again. I tried to draw as much as I could, and then in the next video, we're gonna be on a chart, and I'll be doing the market analysis. Then I'll be, marking those zones at the very same levels where I said you need to look for the pause or a swing high or a swing low, and then also the trend lines. I'm gonna be marking them using the same concept that I just showed you here. Then hopefully you will be able to follow through in terms of when I'm doing the analysis. All right, so then just make sure that you're subscribed, so that when I make the new analysis or the new upload, you will be able to watch it. All right, thank you.